I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for Institutional Advisors. Welcome to the show, Bob.
Yeah, good morning, Jim.
Happy Halloween. Bob, the U.S. Fed did not hike interest rates this week, but they're still hinting that they might hike them in December.
Well, the problem is they really don't know themselves. And they've been dealing with weird theories, that intervention is good and necessary. But I can point out that throughout financial history, any intervention is not good and is not necessary. But anyways, it caused a quick short covering rally going into big news, and then the air sort of went out of things and we're quite rolling over. But you want to take a look at like the S&P, which had its high in the last key high in July, and traded down a bit, and then in August got whacked as the Chinese financial markets collapsed. And then you had a nice rebound, which you expect. Then it went down and tested the lows. They called it Black Monday. And then recovered, which is fine. But I'm looking here at the regular S&P chart, which is certain weightings when they create the index. And then there's another way you can look at it, where it's an unweighted index, so it's actually each stock. But there's a little irony here, because much of the advance in earnings was financially engineered by maybe the overall earnings for a company weren't advancing that strongly, but when you then borrowed money and bought stock out of the market and made fewer stocks, then they could rig the earnings as if they were going up. So you had a whole lot of the S&P 500 stocks were doing that. And then here's the other way of looking at it. You take a look at the unweighted index. Well, it's only made about a 50% of the loss on the Shanghai hit, whereas the weighted index is back to where it just failed. So, but underneath it, some groups have not been doing so good. We're looking at the banking stocks, BKX, and the broker-dealers, where all the lolly's been going into, XBD. Yeah, they got hit hard and rebounded, and you'll remember that we had some amusement in July by saying that the bank stocks look like nice widows and orphans short. Well, they did come down fairly well, and they have had a weak recovery. And it looks like the correction in credit spreads, the difference between high-grade bonds and low-grade bonds, that, of course, turning in June and then breaking out on widening in July and early August. We took that as the signal on a sell-off, and then, of course, what happened is the Shanghai market really sold off. So the worst on credit spreads was with the Black Monday, and then again on October 2nd, there was we all know that the calculation of the employment or unemployment numbers is pretty weird. But nonetheless, even within weird numbers, they had a really bad one, so that was a bit of a panic, and then that's when the lows of August were tested, then early October. And then the U.S. came in with a huge repo exercise, buying bonds, and it put on one of the most dramatic short covering rallies in a long time. So anyways, that then has prompted a correction in credit spreads. So they've been narrowing, which is always a positive, and now for quite some time. So somewhere in here, maybe the next week or so, we could watch for credit spreads to start widening. And then the other one that the Federal Reserve has absolutely no control over is the yield curve, which is the difference between long-term treasuries and short-term treasuries. And it does certain things in good times and other things in bad times. And this week, it's trying to take a step towards a negative signal for the financial markets. Just one little step yesterday, and it's making it back today. So it hasn't really changed, but it's hinting that it'll change. And so we're watching the credit spreads and the yield curve for a change that the Fed will not be able to do anything about. The other one that is hanging around that's not such a good thing is generally weak commodities. You've got natural gas down to new lows for the move, and it's getting quite oversold on the natural gas thing. And we've been looking for copper to decline into November. We're watching that one, and then the crude oil, which we're looking for the rally into September out of the Shanghai crash. There was a seasonal into sort of September anyways, and so it's followed that. But again, looking at seasonals on crude oil, it can often have a pretty good low in December, late December, early January, and I think we can stay with that one. It started to falter here recently. And as I said, base metals and copper are kind of weak. Not much joy there. And then last week when we looked at things like thermal coal and iron ore prices, they had a little relief rally a while ago, but it's still pretty heavy duty in there. And of course, many of the commodity bulls are perplexed by this, but we just say, hey, this is regular post-bubble stuff. Weak commodity prices and a steady to firmer senior currency, which is still U.S. dollar, and it has been firming up in the last week, so a bit of a rally on there. And but I think maybe it might hold sideways for a bit in here. Canadian dollar firmed up going into the fact that we didn't get an NDP government and it ended up with a majority government for the Liberals, but Liberals are just, socialists, but not in too much of a hurry. And the interesting thing is on the federal government, after the election was over, the Conservative Party, which had been attempting to provide sound government and not was accused of running austerity program, and all they were doing was trying to provide a sound government, and realized that government isn't really the best at distributing goods and services. But the Liberals got in on talking about class warfare. They were going to give more money to the middle classes and tax the hell out of the rich, so usual stuff. But anyways, it was a bit of a phenomenon, and you now have a majority government. Now, whether that's a plus or minus, I don't think so. But we'll see what their policies are over time. And then what we want to do is take a look at the precious metals.
And we'll do that right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, AMY, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Bob Hoye. Bob, before we get into precious metals, I just saw on business television they did a study. If they upped the 1% people's taxes, it could raise up to $15 billion for the federal government. And what's more, the excuse, well, if you raise the rich people's taxes, they'll just move. They did a study about people in New Jersey when they raised their taxes. They didn't flee to New York. They stayed in New Jersey for some reason.
If you take a bigger sweep of history, the more money a government spends, the less efficient the economy is. So nobody really makes any money out of ambitious government except those bureaucrats who are promoting ambitious government. And the problem is, though, that originally Canada's political culture was that the government existed at the pleasure of the people, and then more recently it's been shifted all around to where the people exist at the pleasure of the government. Government grants all kinds of rights, which gives us great powers, and it's very hard to control government ambition when they start pushing the Constitution. So, it's something like the top 10% of the people making the highest amount of money pay 50% of all the taxes, and then there's somewhere below half the people are paying no taxes at all. But it's always an awkward discussion. But trust me, over a long period of time, the bigger the government you have, the less well off the general public is within that. Right? Look back on communism, for God's sake. There was really good in-your-face government. But let's continue on. And
so what's happening with gold and silver and platinum?
We had a nice rally for both of them over the last month. And early in the week, the commitment of traders figures, which keeps track of what the spec accounts are doing and keeps track of what the commercial accounts are doing, it got up to exuberant, and we've been looking for a correction in the precious metal sector, which we're getting. I think overall we're building an important base here. We should look back over our shoulders to 2011 when the speculation was to the moon, and many big mining companies were enthused about properties in areas that were terrain, geographically difficult, metallurgically difficult properties, and then in politically dangerous places, and which is the sign of a top. But so this is all being written off now, but our base is what we're looking for was that the gold stocks would begin to outperform the bullion price, which it did, and then a month ago we were looking for to break above the 50-day moving average. It did, and then there's been a pretty good rally since then. So we're looking at this as a correction, an important one, and if you get weaker crude oil prices going into December, that's not going to be an environment where people can get enthused about gold and silver. So we're still looking for the big basing bottom, and once it finishes, then one can look and say that, hey, we're starting on a cyclical bull market, but we're not there yet. It needs just one more major test of the lows.
China this year will have built 4,000 brand new giant shopping malls. again, they say the way we measure our GDP is different than everybody else. Apparently, the more empty buildings you build, the richer you are.
I like that one. And they've been building empty cities and empty industrial parks and now empty shopping centers. But, after the 1873 crash, which involved the speculation involving railroads and a whole lot of expansion that may not have been worth doing. But anyways, Vanderbilt afterwards said makes no sense to be building railroads from nowhere to nowhere at the public's expense. And so these guys are building, he said 4,000 shopping malls. Well, the numbers are big, but who knows whether anybody will shop at those malls.
Well, of course, might be a good place to go live. Well, they do have all those cities of 600,000 people that they've built where they have 400 or 600 real residents.
Yeah.
Where you're the only person who lives in that high rise.
Yep.
Great view.
Yeah, I guess so.
And you don't have to wait for the elevator. If they've installed the elevator.
If they've installed the elevator, yeah. Very good.
Bob, have a great weekend.
You too. On Halloween, have a good one.
Oh, it'll be a scary one.
Okay.
All I have to do is look at my bank account.
We'll talk to you next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for Institutional Advisors. Their website, institutionaladvisors.com. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. Check out our popular YouTube channel, Talk Digital Network. You can forward questions or comments to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.